what is the correlation of, because I remember, Ken, there was a time you were trying to teach me, but sometimes it's a bit confusing, the correlation between interest rates and oil and interest rates and gold.
Okay. So if you're looking at the investing game, or the game that we basically play, all of us, most scenarios are not so easily explained. It's not always A plus B equals to whatever.
It's not fixed.
Sometimes things change. You get. So this time you could raise rates and you could knock off assets. This other time you could raise rates and you couldn't knock off assets. So it's a very, very tough thing to know what will really, really happen if you do a certain thing. But there are certain principles which still hold despite the actions that you take, right? But now if you look at a market like gold, let's start with gold. Gold is inversely correlated to what happens with rates. Why? Gold is not an asset that has any productive utility. You can't say that gold is valuable just because it makes jewels, or gold is valuable. It doesn't have any utility that makes it valuable. It doesn't yield anything. Just because you have gold somewhere in a room does not mean if it doesn't appreciate in price, you can't come and remove anything. But if you look at other assets, for example, stocks are a representation of companies, and companies have some utility, have some production. If you look at land, it's an asset that has some utility. So gold's value came from what? It came from a hedge against things like inflation, against periods of recessions. So gold was a hedge against weak currencies. So initially we had the gold standard, where for you to print money you had to back it up with some gold bullions.
Amount of gold.
Exactly. But now we came off that. And when we came off that, investors started using gold as a hedge against some risks that are contained in the market.
Because gold has intrinsic value.
Exactly. And people call it God's money. Like you can, it's common, it's used everywhere. It was used for years. So it's a very, very important asset when you look at it. But how does it behave historically? Anytime we've seen a rate hike, what does a rate hike mean? A rate hike basically means that the dollar is likely to yield more. So if you give out dollars, if I give you $100 at 0.1 rates, then I take it to 2%. I'm basically making more money if I have dollars, right? So as rates go up, the value of the dollar goes higher, right? If the value of the dollar goes higher, gold has to go lower. Why? First of all, gold is priced in
dollars.
If the dollar is valuable, gold has to go lower, right? That's one. Two, the dollar is yielding, gold is not yielding. What will happen? People will take more money into
dollar cash.
If capital is moving from one asset to another one, what really happens? The market goes down. You get? So those are some of the reasons. If things are going well, if the economy is doing so well, and no one is looking to have their money secure in a certain place, things are going so well. And you know human nature, when things are going so well, no one thinks about when things will start going poorly. Only the smart people. That's why very few people make money in the long run in this game. It's because you have to do exactly the opposite of what the majority of the people will do.
Consensus.
Exactly. So when things are going so well, everyone is optimistic, things are going so well, you'll find assets like gold selling very cheaply. And the people who will buy them during those periods are the ones who will benefit when things start going badly
in the
long term. But the reverse also happens. When things have gone so badly for some time and now things have started going so well, you need to reverse that. So it's always about capital moving from one asset to another, right? Exactly. So like now you've seen capital now is moving away from precious metals, assets like those, and moving now more into other assets like the dollar. So the dollar is likely to become very, very valuable. As rates start going higher, the dollar is one of the most the dollar is one of the most valuable assets during that period. Bonds, what you guys were asking me, what is a bond? It's basically it's a coupon that you're going to get, right? And you're given it at a rate. So if rates are going higher, it means the bond prices have to go lower, but the bond yield has to go higher. And that's why you can see like 10-year yields have gone higher over the last few months. Since the dollar started going higher, yields have also been going higher. That means the markets are pricing in a rate hike. But now when you come to an asset like oil is an asset that is very, very complex. Exactly. Very different. It's a commodity that just works on its own. One, oil is affected by factors of politics a lot. So if you look at the 2020 reason why oil went to zero was basically the war between Saudi Arabia and the other nations. Exactly. When they were fighting over production, and Saudi Arabia decided we're going to just open our taps and we don't care anymore. And oil had to go all the way to zero But when they came back and agreed on some things, you're going to cut production to this level, you're going to do this, oil started coming
Got
back.
a recovery.
Right? 2, inflation. What's the best indicator of inflation? It's the oil market. Because gas prices affect everything. For food to get to you, someone has to use gas for the car to transport it.
Even transport,
air, production in the factory, oil is being used. Railroads. Everything is dependent on oil. And if inflation is going high, there's no way oil prices will go down.
So the oil prices increase.
Exactly.
Because the oil, the goods have increased in price.
Exactly.
So also the oil price payna
increase.
follow suit.
In fact, oil prices will first increase, then the goods will increase, then inflation will come.
So it's more expensive now to transport something.
So
increase the price of the goods.
Increase the price of the goods.
You have a cause and effect.
Cause and effect, exactly. And so oil now, that is the part of the reason why oil is trading so high.
Makes sense.
Also now there's the geopolitical risks. There's the war between Russia and Ukraine. Oil is also a market that is concentrated in only a few countries. You look at countries like Saudi Arabia, Russia, States.
Russia produce oil.
One of the
biggest.
One of the biggest producers.
I think number 2.
Yep.
After
Saudi Arabia.
Yeah.
Okay.
Also, there's the risk of a war. During times of war, oil becomes very, very, very valuable.
Oh, it does?
Yeah.
In terms of war?
Yeah.
Why?
Logistics becomes tougher.
Exactly. Even when times of war are there, the countries which are fighting are likely to stifle production. Production is not likely to continue as it was in the normal occasions. A war basically makes everything go to zero, stand still. Things don't just move. Risk assets sell off. Gold is the best performing asset during such times. You get? So now when you have tensions between countries which are oil producing nations, then you're likely to see oil prices going very, very high. For example, just before the 2020 collapse started, I remember there was a spike from about 50 something to about $65 a barrel when Saudi Arabia was attacked by a certain country. So when such things happen, you're likely to see oil prices going higher. But the current oil price is basically inflation, the geopolitical risks that are there. As long as inflation is going higher, oil will keep on moving higher.
Okay, but that's new. I didn't know. So war makes oil more.
Yeah, of course, yeah. Also, there's that point Ken was saying on gold. Gold is somehow paired to the dollar. Oil is oil. Like oil is the barrel. 1 barrel of oil for $75. Not $1 for, not one barrel for this dollars. You see, exactly. So it's an individual asset. So like haina so much. Basically haina the partner to compete with. See, so it can be very, very directional. That's why oil can just go lower and lower and lower and lower, or it can go high and high and high and
without
high
any
and
major
high,
correction.
without any major corrections, because it's an individual asset. You go to oil peke yake. You see, like right now you saw yesterday when dollar had a spike higher, gold went down because it's paired to the USD. You see, but oil is the US oil, not USD oil.